All right, all right, all right. Good Monday morning. Got my coffee brewing. Uh, take a sip of the first cup from an earlier pot. I'm feeling good. So, hey, do me a favor while I got your attention. Subscribe, hit the bell, hit the like. Any support goes a long way. We got a Patreon account down there. We got PayPal down there. If you came to us through Reddit, throw us a little silver or gold. This way everybody knows we're legit. And I appreciate any support we could get. Stick around to the end, and we'll go over that non-farm payroll trade. But first things first, let's see what's going on in the snooze. Well, never mind the snooze, but let's look at what we got to look forward to in the reports. And we have some inflation data coming in. That's going to be important. Core inflation rate and inflation rate. So the big question is, we created like 500,000 plus jobs, and we're supposed to be fighting a recession. And we've never seen an economic slowdown where we created jobs. So everybody's out there like, what the hell's going on? And, is this going to force the Fed to influence the economy more by raising interest rates even further, being even more aggressive? They're expecting him to be more aggressive at the next meeting. But okay, so new to me too. You know what I'm saying? Nothing I've seen in the years that I've been participating in economics, and but you have to theorize because not only was I a financial guy, but I was a businessman. I mean, I owned the financial institution. I ran the company. I ran many companies, and went in and out of business all of my life, buying and selling different businesses. So that's how you have to think. How would you do this? Just like you're running the gas station on the corner. And if you think about it, okay, we had this great resignation go on for quite some time. We were at a dearth for an employee pool and labor for quite some time. And that was a problem, and people were laying back. And we're at the end of that, really. So this surge in employment, which is an anomaly, is because we're coming out of an anomaly. It has nothing to do with your standard economic measures or activity. It's the overage because we were excessively low on employment. So we created more jobs. We had greater payroll because we're getting out from under that very unusual situation. And I anticipate that there's going to be a revision to the downside on the next report, which is September, first Friday of September. But we're going to see that number taper down considerably in September, because we have this very strange effect of this excess of non-working individuals. So so basically, how it lays out is that I think that the Fed is handling the economy well. I think that everything's going according to plan, and we have nothing to worry about. So you're going to hear a lot of sensationalism about this burnout or the Fed having to be too aggressive, but you're going to see everything's going to come in line. Just like when you look at a chart, at a trading chart, and you see the overages, right? You see like a consistent pattern in the stock, and then you have these days where there's an excessive sell-off, and then it returns. And it's just an overshoot, and that's what this number is. It's an overshoot because we were coming out of a very unusual time as far as people returning to work and things like that, and that's what's happening. So if you look around, you see that things are easing, and it's energy right now. Energy is really the big issue. You see food coming down, you see apparel coming down, but it's energy, and you're starting to see it snap. You're starting to see it break, and that's a hard aspect of the market to figure because it's so manipulated. You have OPEC with their fingers in it. You got the Cheney family with their fingers in it. You even have the Bush family, and they want this. They want these high prices because I believe they're break even at $30 a barrel. Um, so 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 yeah, they're making their money, and then they took a beating a few years ago, so they're trying to get back that lost step. So very manipulated prices, and they're Republicans, so they'll do whatever they can to make a Democrat look bad, and obviously we carry the weight of that. So okay, anyway, core inflation rate. So people are going to be looking at this. Let's get back on track. People are going to be looking at core inflation rate year over year, inflation rate year over year, and trying to figure out what the Fed's going to do. And I think these numbers are going to look good. I think they're going to come in line or hopefully look better than expected. And the question's still going to be, but the jobs, and that's what the arguments are going to be for the next month. So what I'm hoping for is that it took the volatility out of the market and we can get some clarity. And I think we're starting to see things. I think we can see the forest for the trees. And so let's just take a look real quick at what we got going on. And I just need to find all the right charts. Okay, here we go. So if we look at oil, I'm holding a bearish bias on the weeklies, right? And I mean, you could just see it's got this little downtrend right here. Momentum's fading down. We had this steep sell-off on Friday. Beautiful, beautiful. Broke this support right here. And what's this, ladies and germs? This looks like it's setting up a bear flag. So I'm hanging out neutral to bearish, pending a break of Friday's low. That's going to, well, that won't trigger the flag. If we close here and break down, that'll trigger the flag. So we'll watch this. It'll be nice if today consolidates. This is the extent of the action in today, and tomorrow we have an easy entry. If you're playing energy, if you're playing oil futures, anything that pertains to energy, you could do the USO ETF. The chart probably looks very similar. So even you could trade ExxonMobil. Sometimes I've taken advantage of ExxonMobil just watching my futures chart, kind of anticipating when to get out of that. But by the way, I don't know if I mentioned it. If anybody kind of tracks what I do long term, sometimes I talk about it. Big fan of ExxonMobil. We got involved at around 50, 55. I got out of it a few days ago at 94. And the reason why I clocked that one is it pays a crazy dividend. And if I'm going to sit on a stock long term, I appreciate getting paid for it. Another one being AT&T. Which actually I'm chipping away at right here, and it's about 1836. And I started on Friday. I started poking at it on Friday, and I kind of like it right around here. I'm not getting too aggressive because we're down by support, but I'm putting a little bit away, looking for that bounce. And this baby pays like 6% right here. So yeah, I mean, it's AT&T, Ma Bell. Long term, you can make some money on it. Okay, let's get back to business, eh? All right. So oil. What are we looking at? We're looking at the weekly charts right here. We're looking at a weekly bear flag. Yeah, I'm neutral to bearish on this thing. So if I was day trading it or doing short term trades, I'd be looking for bearish trades today. Oh, went down the wrong pipe. All right, let's take a quick look at bonds. Bonds. So so I'm bearish. I'm bearish. We had a this bar right here. This is a high-low reversal bar. Topped out, made a high, turned around, made a new low. We're talking about the week on the weeklies. So that's kind of a peaking out. So this is like blowing out all the meme style traders right here, and this is what the pros are doing right in here. So high low reversal, and so I'm bearish on it, and I'm watching the trade pending the break of this low, and I think bonds are going to go lower, which means interest rates are heading up a little higher. So we're going to watch that, and it all plays out. It plays out into what I see in the market transpiring. So interest rates go up, markets go down, and we'll get to that. We'll see that. So bonds, we're going to look at this, and we're remaining bearish right here, unless we see some sort of reversal doji, which is what this is. This is a high-low reversal doji. Made the high, couldn't turn it, couldn't hold it, turned around, broke the previous week's low, closed down. High-low reversal doji. And then next thing's next. We're looking at gold, and gold's not doing anything, man. I think it's just lost its luster. Pun intended. So nothing. I'm just neutral on gold. It looks like it's developing a downtrend on the weekly. So very possible. We'll watch this. Maybe this will give us a shooting star, and we can make a move on gold next week if anybody's trading futures in gold. So now, last but not least, why your sister's ass? All right, we'll fix that later. Yes. All right. So we're pending right now. We're pending a weekly reversal doji, right? So that's what that looks like. It's not quite a shooting star, and if this gap down, we could argue maybe it is a shooting star, but this is a weekly reversal doji. It shot up, came down, closed, gave us that little cross right there, and this is kind of indicating that weekly trend is going to change, and the weekly trend is obviously up. So we're pending that. Now we're testing the high, which is very interesting, okay? And I'll show you why. If we take a look, so every time you drop down to a lower time frame, you're kind of looking inside of what the higher time frame is doing. We're pending because last week we were bullish, neutral to bullish, right? Because we have this very obvious uptrend on the daily. And this uptrend is continuing. It hasn't changed. Nothing's changed. In order for it to continue, it's going to have to break this high. Okay, so we have this uptrend. Momentum looks good. Looks like it might be rounding out a little bit. We could push. There could be some buying going in, push it up, turn that momentum, straight up. That just means this is a higher low, and the trend continues. But based on what happened last week, we're iffy. So we have that. We're maintaining that bullish bias, but we know that we flip over to bearish if we break this low right here. So, boom, that's what we're watching. Okay, so that's it, man. That's what we're looking at for the week, and we have the weekly trades now. Let's see if I can get my charts up right, and let's take a look at what we did. On oh, here it is. Get up there. All right, so we looked at on Friday's trade. Let's get we did it all on a 30-minute trade, right? If you looked at my Friday video, and if you haven't, go back and take a quick look at that so that you understand the trade, but we'll go over it. Oh, we didn't even think about gold, so ignore that. Okay, so we'll look at the euro, bonds. Put that to 30. Here it is. There it is. And, okay, so we got the euro, the S&P, and bonds. Those are the three markets I look at on report day, right? And what we said was we're going to look for the strongest market and take that trade, right? And then we're going to look for, well, okay, so go back, look at last Friday's video to show you how to enter the trade. And really, here's the strong bar. Everybody saw the strong bar, right? But then we looked for the retrace, okay? And where did we see the retrace? Anybody? Bueller? Okay, here's the retrace right here, right? So the best setup out of all these three markets for me was the S&P 500. And again, I'm looking at the futures, and it's the best trade on the futures, but you could translate it to the S&P 500 market. You could trade the option. You could do it with SPX. If you're getting a 24-hour chart on SPX, the pattern may be relatively similar. I'm going to take a look. SPY. I'm sorry. I'm going to take a look at it later. I don't trade SPY, so I don't know what the 24-hour chart looked like. But okay, so here it is. We had that strong close, and this was screaming at you, man. If you watch the video, this was screaming at you. Okay, here's the retrace. So 8:30 to 9, 9 to 9:30, and the entry would have been the break of this low. Whoops. And this is why you follow rules, right? So that you don't get hurt. If anybody jumped the trade and you're out there, somebody got hurt. So the trigger would have been on a break of this low right here, right? So it would have broke this low. I would have entered the trade. My stop would have went right above here, and I would have been short for the day. and God willing, this will move down. And this shot down because the report was so absurd. And this is a knee-jerk reaction, and I knew this trade wasn't going to happen, right? So short of the long was that if you followed the rules, you didn't take the trade. The trade didn't happen. And like I said, it doesn't execute all the time, but when it does, it's a moneymaker because you get this kind of run after it executes. Well, you get like this kind of run, probably 50% of the first bar. So, you get this monster run, you jump in over here. I mean, you're talking about a shitload of money. So anyway, I'm watching. This was my Friday. After this baby went the wrong way, I said, all right, it's a wrap. That was it. I was done. I went and hung out. My girls came up Friday, and we had a great weekend. And when I say my girls, I mean my girlfriend and my two daughters. Although one of my daughters is hanging out up here. It wasn't like a Hefner Playboy Mansion party. Those days are done. What a drag. But that's why I hung out with my wife, because she was always down for Playboy Mansion parties. So anyway, here we go. And yep, I have that trophy hot wife. She used to get mistaken for, I can't think of her name. That hot Asian actress. She played Cassandra in Wayne's World. So anyway, we used to get stopped in the airport all the time. Everybody thought that's who she was. She was so hot. Now we're just old. Hot wears off when you're old. She's a beautiful old woman, but not hot. All right, so let's get back to the trade, shall we? Okay, so the trade didn't trigger. It pulled back. That's it, man. Just to get back on track, here's the long run down. Here's the consolidation that we're looking for. Boom, we want that fucking trigger. Didn't happen. And it doesn't necessarily have to happen on the second bar. I mean, this bar pulled back, and it could happen a couple of bars later. I mean, I'm going to watch this. This could consolidate for a little while, and then I'll take that trade. I could take that trade up to lunch, no problem. I decided this trade was over because when you have a rundown like this and you get a retrace, like that, or three quarters, pretty much when it retraces about three quarters, it's a wrap. I mean, I'm not, even if it turns around, goes the other way, I'm not taking that, looking for that trade, right? Because I enter here, I'm looking for it to run down. It's just that the momentum has changed. So right about here, I said, okay, it's a wrap. So my day was, until about 10 o'clock. So anyway, that's the trade, man. That's the trade. But first Friday of the month, every month, you look for that trade. You look for a strong move in one of those three markets. You look for the consolidation, and you take the entry. You always put your stop at the low. You don't fuck around with your stop, and you don't jump the trade. If it looks like it's turning around and going back, you don't get out early. Sometimes, momentum changes, and you say, I'm not going to take that full hit. I'm getting out early. But on this trade, you hold out. That's the rule. Run down, consolidate, stops at the low, hold out until that stop gets broken. So on this trade, you're either taking the stop or you're taking your profits. And you don't jump the trade because voila. I mean, a lot of people are getting, there's a strong close. I'm getting in early. I'm going to make that extra $6 and then end up losing a couple of $1,000s. So that's it, man. Once again, subscribe, hit the bell, hit the like. I appreciate the support. Look for my PayPal and everything in the description box. And calm, cool, and at peace when you trade. And good luck with your trades.